Okay, I discovered this. I've been backtesting every day for hours and hours on end, and I think I found out how the market moves. I think this is it right here. And this consistently repeats itself over and over and over again. And knowing this, I think this is how I can get onside with every expansion move in the New York morning session. So let me explain it. So essentially, how does the market move? Everything is market maker models. That is the market. From the weekly time frame, from from the monthly time frame all the way down to the 1 minute time frame. There are market maker models, and from higher time frame to lower time frame, there's models within models. And this is what's happening every single time. And this is the start of every expansion move. So let me explain it. So when you watch ICT, when you study ICT and you see all these YouTubers explaining market maker models, they show you this right here. But they don't show you what's left of that. They don't show you what's left of that causes this move in the first place. So I studied this, found this out, and then began to look left of that and discovered this. Now I'm pretty sure this is probably already taught out there. This is probably all already well known, but I'm just discovering it. So I want to try to teach it in a YouTube video because that'll help me further understand it. But basically, this is it right here. This is it. This is the start of every expansion move. So let's just say the higher time frame narrative is bullish. This is exactly what I want to see on a higher time frame to confirm the next expansion move higher. So when I see this retracement, meaning when I see a sell model on the higher time frame and the narrative is bullish, this is exactly what I want to see to then start the next move higher. So what do we see? Well, first of all, we have our retracement on our higher time frame, but the higher time frame narrative is bullish, but we are seeing this retracement. So that would be a market maker sell model. Okay? Now at the end of the market maker sell model, what do we see? One asset is running the external range liquidity while the other is not. And that happens every single time, and that is going to mark the end of the sell model and the start of a buy model or start the next upward expansion move. So we can see that we have our accumulation range here. We're engineering our low resistance liquidity. Then we start to shift to the sell side of the curve. How do we know we're shifting to the sell side of the curve? Because we leave all these highs intact. So that tells me this is engineering buy side liquidity for the market to run out in a low resistance liquidity run in the future. But inside of this model, we know that we're on the sell side of the curve, and the market is going to want to target the external range liquidity. It's going to have one large low resistance liquidity run. It's going to run out all these lows, and it's going to want to reach the point of origin, what started this entire move. So what I found through backtesting, the ERL is a significant swing point in the market on a higher time frame that starts the expansion move. Like, what started this entire expansion move here? It was this low. It was this low right here. So what we're going to see when we see this retracement, we're going to see one asset, and this is if you're looking at highly correlated assets. In this case, NQ and ES. So let's just say this is NQ on the right and this is ES on the left. NQ is going to reach into the external range liquidity because it's outside of this range, and it's going to run the sell side underneath that low. But ES is not. And what does that create? That creates a higher time frame SMT divergence. That is a Kraken correlation. NQ is delivering to this low, ES is not. And that is going to indicate to me the end of the sell side of the curve and the shift to the buy side of the curve. So because NQ took this low, I'm not expecting to see this low traded down to on ES, because that's my Kraken correlation, and that's going to mark the end of the sell side of the curve and the shift to the buy side of the curve. And if I see this on a higher time frame, that's golden. That is golden. And I can expect the next expansion move to start every single time. Literally every single time. This is what happens. So I think the most important thing is identifying that external range liquidity, which is a significant swing point in the market that starts the expansion move. It's going to be outside of the range. You can see this, everything in here is within the range, and this liquidity would be outside of the range. See, this would be our range right here. From here to here. Hello. From here to here, this would be our range, and this would be outside of it. So this is our external range liquidity, It also started the entire expansion move. It's this swing point right here. One asset is going to run it, the other is not. You're going to see this on a higher time frame. And then we're going to see a smart money reversal, or an SMR, where we see a market structure shift. We violate a PD array, an opposing PD array on the left side of the curve because we're bullish. We violate an opposing PD array on the left side of the curve. We see our shift in market structure. And if we have a lower time frame momentum SMT, that is golden as well. So if we have a higher time frame SMT, then we go into our lower time frame SMT after we see a shift in market structure, and then we see a momentum SMT as well. That is golden, and that is a very high probability setup. So here's our higher time frame directional SMT, right? Because this is going to indicate a change in direction. And then we have our lower time frame momentum SMT, and this is going to confirm the start of the expansion move. So that's what we're looking for. And what I really want to see, what is really, really important, is that on the left side of the curve, we want to see a bearish PD array violated. So ICT says that in order for a trade idea to be valid, there has to be three opposing PD arrays violated. So in this case, I like to see a bearish imbalance just completely disrespected, plus a market structure shift, plus a bullish imbalance. And then I want to see the market trade back into that bullish imbalance and then begin to trade higher. And then we also have a breaker block as well. We have a low, a high, a lower low, and a higher high. So we'd focus on the candle in this high right here, and that should be respected. So let's just say that the bodies of the candles on the right side of the curve respect this breaker block on the left side of the curve. So that is it. That's going to start the change in direction on a higher time frame. And then how does this move end as well? Well, we see the same thing, right? One asset is going to run the external range liquidity while the other is not, creating an SMT divergence, a Kraken correlation, and that's going to start the next sell side of the curve because this buy model is complete. This buy model is now complete because one asset took the external range liquidity while the other did not, creating an SMT divergence. That's going to, and this is on a higher time frame, right? And this is going to indicate a change in direction. So this is my higher time frame directional SMT. And then I'd want to see the same thing down here, but to the downside. It's the same thing, and this is the start and end of literally every single move. So now I'm going to go back through this week and just hindsight back test and see if I can find some examples of this. So automatically, looking at this chart right here, what do we have? We have our SMT divergence, right? And look what this led to. This led to a strong open, low, high, close candle on the weekly time frame. So yeah, I got a bunch of drawings and whatever. It's messy, but look at this. Study. Where's my external range liquidity? It would be this low right here on both assets. On Tuesday the 25th, or this low right here, doesn't matter, either one. Why would this be my external range liquidity? Because it started this expansion move higher, right? Started this expansion move higher, so this is my external range liquidity. Now once ES runs that, but NQ doesn't, that creates an SMT divergence, a Kraken correlation, and look what happens. The market begins trading higher. So you can see that ES is running this low while NQ is not. So I don't expect this low to be traded back to on NQ. NQ is relatively stronger. And this is what I want to see on a higher time frame. If I see this on the daily chart, that's golden. Automatically, I'm thinking higher prices if I see this, especially back into that weekly imbalance. So it's just really, really strong confluences right here. And we have another SMT relative to the Monday and Tuesday low. So if ES runs Monday's low, then I'm not expecting to see that low ran on NQ, because what do I need to see on a higher time frame to confirm a change in direction or confirm a smart money reversal? I need to see a higher time frame SMT. So one asset is going to trade down to it, the other is not. and then I look for my market structure shift. I look for bearish PD arrays to be disrespected, and then I can look for my entry. So this happens on the daily chart. That's golden. And this just makes the rest of the week easy, because if I see this on a daily time frame, that literally gives me my bias for the entire week. So going down to 4 hour. I think I already have these marked out, so I'll have to delete them. There we go. Okay, you can clearly see the SMT divergence, right? Here's the previous week low. ES is running out the previous week low, NQ is not. So that is a cracking correlation, and that's going to confirm the end of this sell model and the start of a buy model. And this happens over and over and over again. See, we have a sell model right here, which is a retracement on a higher time frame. If we go back up to the daily chart, it's this small retracement, right? So ES is running out the previous week low, NQ is not. Cracking correlation, what does that tell me? A change in direction. This is on a higher time frame as well, but you can do this on literally every time frame. I can look for this on the 1 minute time frame to give me my entry. And I'll probably try to find an example of that. But this is it. ES takes the previous week low, NQ does not. That indicates a change in direction. Then I look for an SMR, and I look to get long off of that. And there's also an SMT divergence relative to Monday's low. We can see that there's a retracement lower. So if we zoom in on a lower time frame, this would be a sell model. And ES reaches the ERL, but NQ does not. And that would be the start of the next move. So on the hourly time frame, that would be a sell model, correct? Yes, it would. If we zoom into a lower time frame, here's our sell model, right? Right here. Here's our sell model, which is just a retracement to set up the next expansion move higher. See, on NQ, we don't reach that URL. We don't have to. ES did, and that created a cracking correlation. And now I want to expect higher prices because I saw that cracking correlation. And then at that point, I would look for a smart money reversal, and we can see on the hourly time frame, we get it. There's an hourly on the left side of the curve, right? We want to look for bearish PD arrays to be disrespected. We also have a change in the state of delivery. All these down close candles are displaced, so we're no longer respecting institutional order flow, bearish institutional order flow. We have a new imbalance, a new hourly FVG, and the market trades higher. If we even analyze this little SMT divergence right here, we can see that this is a buy model as well. Let me get my arc. Right? This would be a buy model. Here's our sell side of the curve, our buy side of the curve, and we can see that NQ reaches the external range liquidity, which would be this significant swing point in the market right here, right there. This high right here, this shit is fucking messy. Let me get rid of this. Don't need that. Okay. Zoom in on ES. So this is the buy model. This is the external range liquidity, Y. because it started this entire move down. This is the significant swing point in the market that started this entire move down. And we can see that NQ runs it out, ES does not. So that's going to indicate a transition to the sell side of the curve. That indicates to me the end of the buy model. And then what do we get? A retracement lower to start a sell model. And then what ends that sell model? ES runs the ERL, NQ does not, and the market starts expanding higher. And that's how the market moves, literally. So we go from sell side to buy side. So this is a buy model. One asset runs the ERL, the other does not. On a higher time frame, that leads to a transition from the buy side of the curve to the sell side of the curve. We can see that NQ fails to reach that ERL, but ES does. Cracking correlation to S&P divergence. And then the market transitions back to the buy side of the curve. And it's that fucking simple. Even right here. This is a sell model, right? This is a sell model right here. NQ is running out the ERL, this accumulation range right here. ES is not. Cracking correlation. And what does price do? Expand higher. High probability distribution Wednesday. And that's basically it. And that's how the fucking market moves over and over and over again. See if we see it in Friday's range as well. Sure we do. Right? Here is... I would consider this a buy model as well. We can consider this high, or maybe even this high, the ERL. You can see that NQ runs it out, and so does ES, so this would not be a good example of that. But there's an SMT divergence right here to start the transition to the sell side of the curve, and this is just a retracement lower on a higher time frame to start the next expansion move higher. SMT divergence at the lows. We can see that this sell model is complete because ES runs the ERL, NQ does not, and the market expands higher. And that's it. So I'm gonna keep this one short. That was 17 minutes, so not really short, but that was it. I just wanted to explain that. Hopefully I explained it well. And yeah.